For 4 years, the greatest investor alive sat on top of the biggest pile of cash in the history of money and did nothing. Picture it exactly the way it sounds. An old man, a mountain of dollars, and total stillness. $397.4 billion. To spend that at $1 million a day, you would have to start in the year 938. Vikings are raiding the English coast. The number 0 has not reached Europe yet. You start spending $1 million a day, every day, through the Crusades, the printing press, the entire history of the stock market, both world wars, the moon landing, and the invention of the meme, and you run out of money roughly, now. And the pile was not invested in anything exciting. It sat in treasury bills. The greatest stock picker who ever lived, holding the one instrument on earth designed for people who refuse to pick stocks. Every quarter, the same routine. Objective, find something worth buying. Result, nothing is worth the price. Objective, failed. 14 quarters in a row. Berkshire Hathaway sold more stock than it bought for 3.5 consecutive years. And every May, 40,000 people flew to Omaha to watch it happen in person. Somebody stands up. Warren, when are we gonna buy something? A man in his 90s sips a cherry Coke. Nothing is worth the price. 40,000 people nod and fly home. 2023, 2024, 2025. Same question, same Coke, same flight home. And holding still was never free. Inflation was inside the vault the whole time, taking one forkful a night, like a roommate who swears he never touches your food. The biggest cash pile in history was, very slowly, a melting one. So that was the situation. The pile, $397 billion. Status, unmoved. Remember that line, because this whole story is about the day it changes. Then Buffett handed the pile to somebody else. And last Friday, August the 8th, we found out what that somebody does with it. Fair warning. The strangest detail in this entire story is who actually made the new era's signature move. I am saving it, because it recolors everything. This channel reads these filings so your group chat gets the number right. If watching the world's largest pile of money finally twitch is your idea of entertainment, subscribe! It is the only free thing in this story. First, you need to know what Berkshire Hathaway actually is, because it is not a hedge fund with a folksy mascot. It owns things. A railroad. One of the largest energy businesses in America. It owns Geico, Duracell, Benjamin Moore, Fruit of the Loom, and Dairy Queen. The company holding the Apple stake will also sell you a Blizzard. The stock portfolio is the famous part. The bigger part is a machine of trains, power lines, insurance, and paint that earns money whether or not anybody in Omaha ever buys another share of anything. Which brings us to the new guy, Greg Abel, 64 years old, Canadian, trained as an accountant, ran the energy business for 2 decades, then everything at Berkshire outside insurance and the stock portfolio. He is not the man from the memes with the cherry Coke. He is the man who kept the trains running while the memes were happening. At the start of this year, Buffett stepped back at 95. Still chairman, still in the building. Hold that thought. Abel became chief executive of the company and of the pile. And the entire financial world leaned in with one question. What are you gonna do with $400 billion, Greg? His first quarter answered, $235 million of buybacks. On a pile this size, that is 0.06%. A number so small next to the thing it came out of that you have to lean all the way in just to see it. The pile, unmoved. So the world shrugged. New man, same nothing. Then Friday morning, the second quarter report dropped. You open a Berkshire filing the way everyone opens a Berkshire filing. You skip the letter. You skip the segment tables. You scroll straight to one line, the cash line, the number that has only gone up since 2022. $365.5 billion. Down. The pile, for the first time in 4 years, smaller. You keep scrolling, and the quarter starts talking. Buybacks, $4.5 billion. Put that next to last quarter's number. $235 million against $4.5 billion, 19 times bigger. Net stock purchases, roughly $20 billion. For the first time since 2022, Berkshire bought more stock than it sold. Somebody in Omaha finally pressed the other button. $20 billion of the other button. The Taylor Morrison deal, an entire home builder, not a position in one, the whole company, closed. And the top 5 holdings now read Apple, American Express, Bank of America, Coca-Cola, and brand new Alphabet. Moving in next to a stock Berkshire has held since a decade before Google existed. Meanwhile, underneath the fireworks, the boring machine had one of its better quarters. Operating earnings up 16%. The trains grew. The power plants grew. The paint and the underwear grew. The energy business grew 27% all on its own, and nobody wrote a single headline about it. Insurance was the weak spot, with underwriting profit down 13%. Every group project has one member coasting, and this quarter it was the business Buffett is most famous for. Net profit, the number in every headline, doubled. $25.67 billion. And Buffett would be the first to tell you to ignore it, because accounting rules make it swing with the stock portfolio. The one he tells you to watch is operating earnings, the 16%. The exciting number is weather. The boring number is climate. And I will be honest, this story has radicalized me. I too have decided the era of hoarding is over. I am deploying my cash pile. All $3,097 of it. Greg and I are going through the same thing, because every single person watching this has a tiny Berkshire of their own, and all of us were waiting for somebody qualified to go first. Now the detail I promised you, and it is genuinely strange. Buffett went on CNBC and, in the calmest voice imaginable, took credit for the signature move of the Abel era. The $10 billion Alphabet position was his. He initiated it. He consulted Abel. Sure. The 95-year-old picked the stock. To feel how strange that is, rewind. This is the man who avoided technology stocks for half a century and made exactly one exception, for Apple. Back in 2017, he stood in front of his shareholders and called missing Google one of his great mistakes. 9 years later, he fixed it, on the literal way out of the door, like a man fixing the squeaky hinge on his last day in the house. So the signature move of the new era was partly made by the old one. Remember that every time a headline announces a new chapter, the previous author is still upstairs. Now add up everything you just watched, because almost nobody did. Buybacks, $4.5 billion. Stock purchases, $20 billion. One entire home builder. Total moved, $32 billion. That is 8% of the pile. 8%. The coverage called that a big chunk. Headlines wrote it up like a dam breaking, and the filing reads like a man opening a tap 1 inch. 8% is a toe in the water, with $365 billion of legs still dry on the beach. Now, I can hear the objection from here, because half the internet is currently making it. He is buying at record highs. So the bottom is in, and the bottom is an all-time high? 4 years of waiting for a crash, and the grand strategy at the end was getting tired of waiting. And the other half of my brain immediately fires back. What was he supposed to do? Sit in treasury bills until the heat death of the universe? The index compounds about 10% a year while you wait for your perfect entry. At some point, the safest thing in the world quietly becomes the most expensive thing you own. Sit with that pair for a second, because both sides are right. Buying at all-time highs is frightening. Waiting 4 years while the index compounds without you is expensive. Those two cannot both be the safe option. There is no third option, and Greg Abel is the first person in 4 years whose actual job is to pick one. Because you know this feeling personally. The dip is coming. The dip is almost here. The dip has been stuck at 99% for 4 years. It is why, at 2 in the morning, half the internet is typing the same unfinished sentence into a search bar. Should I invest now or wait for? Nobody ever finishes it, because the honest ending does not exist. Let me put the bit down for 1 second. Some amount of money is sitting in your account right now, waiting for a dip that keeps not arriving, and you cannot tell whether what you are doing is discipline or fear. Nobody can tell you from the outside. The two look identical for years at a time. The greatest investor alive spent 4 years on one side of that question, and this year's bill is public. Berkshire, up 3% in 2026. The S&P, up 13%. Up 9% over the last 3 months. So the market clearly liked the news. But that gap is what caution costs when the dip does not come. Because not buying was never neutral. It was a position, taken deliberately by the best to ever do it, and it still had a price. Discipline is not free. It just sends the invoice later. So here's how to read the first move, and every move after it. Look at what it is made of. His own company's stock, the single most self-confident purchase available to man. A home builder, exactly the kind of boring, physical, cash-generating business Abel has run his whole career. And one technology giant, partly chosen by the 95-year-old on his way upstairs. And look at what did not move. The pile. $365.5 billion. Status. Still enough to spend $1 million a day until the year 3027. This was the first move. It was not the whole move. So the thing to watch is not this quarter. It is the next one, and the 4 after that. Does the cash line keep falling? Does the net buying continue? That one line in the filing is the only interview Greg Abel will ever really give. Picture the room from the start of this video one more time. The mountain of dollars is still there. The stillness is still there. The only thing that changed is the man sitting on it. Buffett told you what he believed by doing nothing for 4 years. Abel will tell you what he believes the exact same way. Slowly, in a table, with no adjectives. I will be reading the next filing the morning it drops, so subscribe if you want that number translated before your group chat gets it wrong, and I will see you then.